All right, everybody, it's me, Gregory Mannarino. It is still Thursday, August 26, 2021. This is my post-market wrap-up. It's a freak show, and we had three freaks today to deal with. Not one, not two, but three freaks of the highest order right out of that institution known as the Federal freaking Reserve. All right, now before we get there, let's just go over this market real quick. So stocks sold off today, about 0.5% across the board. Okay, we've been getting record high. Imagine my shock that maybe one day in the last, I don't know, three, we have a little give back in this market. It won't last. The freak show, the three freaks today, maybe had something to do with this, but it was really crude oil here. That 10-year yield, people are a little leery where it is right now. I am not with the 1.35 10-year yield. The dollar gained a little strength here. The energy sector was a poor performer today off the back of crude falling. You know this game. You know how it plays out better than anybody. Okay. So with that said, again, we have a sell-off in the market, nothing major. I mean, almost nothing here. Crude oil fell about 1%. That 10-year yield, we're going to talk more about that in a moment. The dollar getting stronger. That's it. And nothing major going on here. Pretty much a zero day, if you ask me. Cryptocurrencies under pressure here, people. I'm telling you. Mark my words. Remember what I'm telling you. And I know a lot of you will. This was needed. We needed to see cryptos give a little back here. The run-up has been actually kind of unbelievable. So I am loving this right now. I think we need to consolidate, give a little back, and that'll be a nice place to start buying a little bit more if you want to. Again, do your own research here, but I firmly believe cryptocurrencies are going much higher moving forward. Gold today put on a little gain. Silver fell a little bit. Nothing major. Again, it was a nothing major day, really, despite not one, not two, but three freaks from the Fed coming forward. You know, let's talk a little bit about that. So we had Fed President Bullard, Fed President Kaplan, and Fed President Esther George, or Festering George, in my view, all saying the same thing, okay? Pretty much, that the Federal Reserve has got to start tapering sooner than later. But Bullard, okay, he came out and said inflation is getting out of control. Really? No, yeah, really? Yeah, it is getting out of control. But now we have an admission that it's getting out of control. It's not moderating. Okay, that's a quote here. And he's calling for a taper to stop the out of control inflation. You see, but what he won't tell you is in order for this to happen, sincerely, first of all, it can't happen. Okay, that's it. I don't care what the Fed does. They cannot stop the monster they created, nor do they really want to stop it. You understand? They don't want to stop it. So in order for the Federal Reserve to actually do anything meaningful, which would not stop inflation, but it might slow it down, they would have to aggressively stop buying assets. You know what? Let's elaborate on that point just a little bit. All right. Now, we understand that the Federal Reserve is involved in the biggest, well, it's a crime in the history of the world. They're creating cash out of thin air in any amount they want to, okay? Our very caring, loving members of Congress gave them a blank check courtesy of you and me. They can do whatever they want to. They can just, they have no restraints whatsoever. Okay. Now, so in this thing that's going on here, buying billions, hundreds of billions of dollars, it's in the multiple trillions of dollars right now since this whole thing started in the meltdown of 2008, but you're not allowed to know that. It's actually in the quadrillions if you add the derivatives associated with it, but you're not supposed to know that either. Here's the deal. This is what's going to happen here. All right, the first thing the Fed is going to do, the very first thing they're going to do, eventually, and again, all the talk today, CNBC, Fox Business, Vomitous, Bloomberg, all of them, it's the taper, the taper, the taper, the taper, the taper. Come on. But anyway, what they're going to do first is nudge the federal funds rate, which is the overnight lending rate. I think most of you understand that. They want to see how the market's going to react. That's going to be number one. We're going to see, a fractional raising of the federal funds rate off of like zero, where we are right now. And then they're going to wait to see how the market reacts. I personally don't believe it's going to do much to the market at all. As a matter of fact, this is what I really believe is going to happen, and it's going to be interesting to see this play out. So save this video, wherever you want to save it to. We're going to get a nudge higher in the federal funds rate. When? I don't know. Maybe it will be by the end of this year or close to the end of the year. But that doesn't mean that the Federal Reserve is tapering, okay? Tapering is involving stopping purchasing assets. And I already told you, they're not going to stop. They are not going to stop. Right now, there are minimum purchases, $100 billion per month in treasuries, $40 billion per month in mortgage-backed securities. Those are minimums. Okay, maybe they'll mess around with the minimums, but they're not going to toy with the maximum. We're not even allowed to know if there's a maximum, for which there isn't. They can do anything they want to. So again, the Federal Reserve is still going to be buying a historic amount of assets, and they're going to continue to suppress rates for as far as the eye can see and beyond. So again, this is going to be a several step thing here. Federal funds rate, fractional nudge. I personally think you're going to see the 10-year yield drop. Okay, it's not going up here. There is going to be a point, and we all know it, when there is going to be a massive sell-off in the debt market. Rates are going to spike, and it's going to put a lot of pressure on the stock market. But this is how this is going to play out. Again, I told all of you, I'm going to let you know the big secret, unless you don't know, I have the Fed's playbook. So with that said, we can peer into the future just a little bit. So imagine your shock when the Federal Reserve nudges the federal funds rate. I don't know. We'll see whenever that happens. But forget about asset purchase reduction. It's not going to happen. I believe the Fed will be increasing their purchases of assets and keeping rates suppressed again, beyond the point of ridiculousness, which we already surpassed that, half a decade ago or a decade ago. And it's going to continue. It's going to continue and continue and continue. You see, I've elaborated on this before. When we had the meltdown in '08, and the Federal Reserve started quantitative easing one, and they started, buying these massive asset purchases and pushing cash into the markets, it was to unfreeze the credit market. We were in the middle of the entire system locking up, no transactions, we just stopped. Once the Fed got this going again, that's when they should have stopped. But they said, hey, now is our opportunity, for which they allowed this to happen. This was all thought out before. Okay, to get in here and start, buying and buying and buying and buying and issuing more debt for the last over a decade, to bring us to the moment where we are now. Reinflate a housing bubble, reinflate a stock market bubble, causing all kinds of distortions and rigging across the spectrum. You know all this if you've been following my work. But the next setup is pretty simple here. They're not done by a long shot, in my view. They really want to own it all, and they're going to do that. They already do. They've become literally the lender and buyer of last resort. They have no intention of giving that up. This gives them an enormous amount of power. You understand? And so again, we very well could get a nudging higher of the federal funds rate, but with regard to asset purchases, there will be no stopping. None. So don't you even worry about that one. It's just not happening. So anyway, that's the story today. A market that did relatively nothing, a slight drop, 10-year yield, 1.35. I don't think we have to worry right now about a spike. I believe it's going to come down a little bit we're in a range. Okay, like I told you, if we stay in this range, the market's going to love it. It's going to get all giddy over it. All right, the dollar, the market would love to see the dollar get weaker, and I believe sincerely that is going to happen. Right now, there's a little fear in the market. Henceforth, you get this nudge higher in the dollar. You all know this again. Crude oil, it's going up. So right now, I think we're consolidating, maybe giving a little back, and we're going a lot higher. That's going to boost the energy sector, boost the financial sector, pull stocks higher with it. That's how it's going to go. All right. Cryptocurrencies right now, like I said, consolidating a little bit. This is a beautiful thing in my view. Gold and silver, I told all of you, we had that big drop a while back. We've been consolidating for a while. And again, but there's no price discovery. When you have the largest bank on the planet, JP Morgan, deliberately rigging the market via the derivative, it's very difficult for these assets to do anything, but it gives us opportunity to buy more suppressed rates, suppressed prices. And again, the risk-on environment will turn risk off. And that's when these things here are going to explode to the upside. Again, cash doesn't go to money heaven. It just moves from one place to another. When we get this spike in the debt market, the 10-year yield, and the stock market sells off rapidly, that cash is going to move into commodities, people, and cryptocurrencies in my view. So that's how it's going to play out moving forward. I've been explaining this same scenario for quite a while. All right, people, look, this guy here loves you a lot. Please share the video, get it out there, and I will see you tomorrow.